Hello and welcome to my War and Markets review. Today, May the 15th, Friday. The market was, large caps were flat, 0.18% up, but the broader market was down today. Mid caps were down 0.4%, small caps down 0.6%, and micro cap also down almost 0.4%. Advanced decline was heavy in favor of declines, 1:2. About 1,000 stocks went up, but almost 2,000 stocks came down. So what caused this broader market pressure today? Well, it was obviously the announcement of the petrol and diesel price hike by 3 rupees today, which the market did not take well. Why did it not take well? The domestic investors was because anticipation was of a much higher price hike that they would do, and the impact on the fiscal deficit, the oil marketing companies' profits, all of that weighed down. And the fact that it was a small hike meant that people were saying, oh, are there going to be more such small hikes coming through? So overall, markets were not very happy with that in terms of the fact that only a small bit of the problem was addressed. So naturally, it led to a day where even the DIs were net sellers today to the extent of about 2,000 crores, right? But on such a day, the FIS data shows a positive number of 1,300 crores. Did the FIS then look at the uh, price cut in terms of, not price cut, the price hike in terms of the petrol and diesel positively, and let's say they turn positive? Well, let's dig a little deeper into that. The answer is not so simple. So what I've done is looked at the macro, because FIs are more concerned with the macro story around it. And today the macro was not great because Brent crude further worsened from 105 to 108 because none of the Trump-China endeavors seems to have led to any closer to the solution, at least from the initial feedback. The dollar strengthened again to 99. The interest rates in the US are now at 4.55, indicating that there's no sign of a rate cut there in the rate hike. So that added pressure to the rupee, which crossed $96 for the first time in history today intraday, ended close to 95, 96. And so the swap markets 1 year forward are showing about 388 points as the swap points, which means that forward rate for the market is 99.83 at the close of the 100. So all of these are not indicative that it will lead to FII buying today, right? So what does the answer lie in? Well, answer lies partly in the fact that FIs were probably happy that the government came to grips with the problem and decided to pass on at least a smaller burden to the customers. So they felt that government is conscious of the fiscal situation to some extent. Maybe there was a slight hint there. But also, I dig deeper into it and I found that there was a lot of block deals executed today, which were fixed many days ago, but went through the exchanges today. So that's probably what it was, more stock specific. I don't want to get into the names of these stocks in that point, but it's probably a little bit of that which led to a marginal positive of 1,300 crores, because otherwise what actually buying they did was really reflective of what the other data that I showed, that is a weakening rupee with a macro being not so stable, but broadly they are being happier with the way government is finally coming to grips with the real problem of passing on the oil price hikes. So they bought the defensives today. So the large cap slight positive you saw was because we had pharma, a little bit auto was flattish, but FMCG, which is a favorite sector of FIS, and IT finally coming to green today. I think IT was the best performing sector with about 1.2%, right? And all these days I've been saying that despite the rupee weakening, IT, because of the AI overhang, has not participated as a hedge against currency weakening. Today it has happened that way, probably because with a 27% correction YTD in IT sector, it's probably reaching a value zone where AIs feel that it can take a little bit of IT into their fold because it is a currency hedge end of day, but they've already 27% correction, so they don't expect too much more correction. Is a small read. So that's how we saw that the large cap. But today DIs were negative, and I suspect that even retail and individual investors today booked profits today, because that's why the advanced decline was so much in favor of declines, and you saw across the board the broader cap being negative. So clearly, the situation then is that the rate hike has not helped the market in terms of domestic. FIs seem to be reasonably comfortable there, but it's not a big buy figure from them because the macro data around the geopolitics still continues to be bad. So that's a summary for today. I'm not going to give an outlook for Monday because 2 more days of a lot of things can happen in these days of Trump in China and geopolitics. So when I do my weekly review on Sunday night or Monday morning, I shall talk about how Monday looks and how the week can progress. So until then, till my next review, goodbye and happy investing.